Texas to follow El Salvador's lead? According to a poll, 37% of people desire crypto payments. 2 pieces of cryptocurrency law went into force in the state lately, and many establishments now accept digital payments. According to a new Newsweek poll, as many as 10.8 million Texans may favor legislation legalizing cryptocurrencies in the upcoming election. According to a September 20 article, a Newsweek poll of over 9,700 eligible voters across 10 United States found that 37% of Texas citizens would support a ballot item legalizing crypto, while 42% would support crypto-friendly legislation comparable to Wyoming's. With a population of around 29 million individuals in 2021, Texas may have more than 10 million residents that support cryptocurrency adoption. The poll, held between August 20 and 24, was undertaken by the United Kingdom-based business Redfield and Wilton Strategies. It was performed prior to the implementation of 2 pieces of crypto law in Texas. House Bills 1576 and 4474 establish a blockchain working group and change the state's Uniform Commercial Code to incorporate cryptocurrencies into commercial law, respectively. While Texas is becoming a crypto mining hotspot due to the state's renewable energy sources and loosely regulated power grid, not all retail shops accept Bitcoin, BTC, as payment. Although large supermarket chain H-E-B announced in June that it would host CoinCloud's crypto ATM machines, some residents appear to be skeptical about further acceptance. "I'm uneasy with any non-physical currency serving as the sole medium of exchange," remarked Lord Pimpernel, a Texan and Redditor. "I am aware that there is a movement on to abolish currency, primarily for tracking and taxes purposes. I'm a little too much of a seasoned pirate to accept that." According to Cointelegraph, California is one of the most crypto-ready states in the United States. Texas, meanwhile, landed in 3rd place behind New Jersey in terms of crypto ATMs, around 2,396 according to CryptoHead, and planned pro-crypto legislation. Along with House Bills 1576 and 4474, House Bill 2199 cleared the Texas House of Representatives in May before being taken off the Senate calendar. The bill would study the establishment of a legislators' and citizens-led workgroup on digital identification. If a party wishes to capture crypto voters, it must act quickly, not only to beat the other party to the punch, but also to anticipate laws that would be difficult to undo once adopted, said Louisa Idell, head of insights at Redfield and Wilton. Kazakhstan's meteoric rise to 3rd place in the cryptocurrency mining business. Kazakhstan's meteoric rise to 3rd place in the cryptocurrency mining industry, trailing only the United States and China, did not go unnoticed. It was China's headline-grabbing crackdowns on crypto mining, prompted by officials concerned about the sheer volume of electricity the industry consumes from the grid, that prompted firms to relocate in droves to the neighboring Central Asian nation, drew in part by cheap electricity. According to a study published on July 15 by Cambridge University's Cambridge Centre for Alternative Finance, China's proportion of worldwide Bitcoin mining has recently fallen to 46%, down from 75.5% in September 2019. Kazakhstan jumped to 3rd place in the Bitcoin mining industry as a result of many enterprises gaping Beijing's crackdowns. Among those that fled was Bitmining, one of China's top miners. Following its June suspension of operations in the Chinese province of Sichuan, the firm sent its first batch of 320 mining machines to Kazakhstan. In July, Bitmining purchased an additional 2,500 machines valued at around $6.6 million for deployment in its Kazakhstan data center, increasing the company's theoretical hash rate capacity by 165 ph/s. Between June and July, a slew of other transactions in Kazakhstan's crypto mining business occurred. Canaan, a Chinese company that is one of the largest manufacturers of cryptocurrency mining machines, specifically ASIC mining machines that operate by solving the complex mathematical equations required to confirm blockchain network transactions, announced in June that it had established a base of operations in the former Soviet Republic. The company has opted to start its own Bitcoin mining operation in order to diversify away from its business selling mining equipment, which has seen a decline in demand due to the crypto market collapse. Energix, which was already operating in Kazakhstan prior to the Chinese enterprise's move, secured an arrangement with Hong Kong-based Bitmain to host Bitmain's Antminer S19 Pro machines inside Energix's Kazakhstan data center, a massive 180 megawatts facility. The facility, which was commissioned in 2020, is now Energix's third largest. Energix also inked an agreement with Watom, a cryptocurrency mining firm based in the United States. Watom will invest $2 million in a 16-megawatt cryptocurrency mining farm in Kazakhstan that will be operated by Energix. The Nine, based in Shanghai, struck a joint venture deal with Kazakh cryptocurrency mining firm Kaz Digital in August to build a 100 megawatts crypto mining facility in Kazakhstan. The Nine stated that it would first transfer 1,000 mining machines to Kazakhstan in order to do a trial operation. In the same month, the Nine entered into another joint venture with Kazakhstan's LGHSTR for the development of cryptocurrency mining facilities with a combined capacity of 200 megawatts. The locations have the capacity to deploy over 50,000 S19 Antminers and generate approximately 5 A/s of hash power. Taoping, a provider of blockchain technology and smart cloud services based in China, announced in August that its wholly owned subsidiary Taoping Digital Assets Asia Limited, TDAA, had signed a Memorandum of Understanding, MO, with the Kazakh firm Aral Petroleum Capital, APC, to establish a joint venture in Kazakhstan. The joint venture intends to invest in and construct cryptocurrency mining facilities with a combined capacity of 100 megawatts. It will then operate and maintain Bitcoin mining equipment in Kazakhstan. This massive influx of Chinese miners into Kazakhstan appears to be backed by the Kazakh government, in contrast to the central bank's skepticism about digital currencies just a few years ago. Collaboration with regional banks. According to the Kazakh Association of Blockchain and Data Center Industries, crypto exchanges registered in the nation would be required to begin collaborating with local banks to facilitate Kazakh customers' access to cryptocurrencies, specifically Bitcoin. The Astana International Financial Center, AIFC, which licenses cryptocurrency exchanges operating in Kazakhstan, has already initiated a pilot operation with banks to test the concept. For access to cryptocurrency exchanges, the new scheme requires a centralized and AIFC-registered crypto bank account, bank-held wallet. The authorities believe that crypto users can rely on this account to buy and sell Bitcoin, execute transfers, and conduct other exchange market transactions. Additionally, new bank accounts will be able to receive fiat cash linked to a source of income, with the bank acting as a centralized intermediary for all transactions. However, these new regulations may not benefit crypto consumers, who may prefer to avoid dealing with banks while using crypto exchanges. Electricity price regulation. Kazakhstan's President Kassym-Jomart Tokayev has signed legislation imposing a surcharge on electricity used by cryptocurrency miners in the country. As a result of the new surcharge on the electrical energy they consume, crypto mining businesses will be compelled to pay more than other power consumers in Kazakhstan. The measure establishes a new tax of 1 tenge, $0.0023 every kilowatt-hour consumed by cryptocurrency miners. The new rate will take effect on the 1st of January 2022. Kazakhstan's average price per kilowatt-hour is currently around 5 cents, compared to 9 cents or more in Russia, China, and the United States. The bill appears to be an attempt to allay concerns that Kazakhstan may fall short of its Paris Agreement pledge to cut glasshouse gas emissions by 15% by 2030. The departure of Chinese enterprises to Kazakhstan's Central Asian neighbor portends significant growth in the amount of electricity required for crypto mining, a prediction made worse by Kazakhstan's strong reliance on coal-fired power facilities. On the market side, the new tax was met with widespread and harsh condemnation from industry organizations. In August, Forbes Kazakhstan quoted Alan Dorchiev, president of Kazakhstan's Association of the Blockchain and Data Center Industry, as predicting that the new tax will likely result in a loss of international investment and an annual loss of roughly KZT 10 billion, $23.5 million, tenge. The association's president voiced concern that, instead of a projected additional KZT 4.4 billion, Kazakhstan's budget would get only KZT 2 billion over the next 2 years, eventually dwindling to zero. This puts the government in a pickle, since the country's low share of renewable energy in electricity production and the necessity for significant investment in renewable energy preclude any likelihood of a short-term shift to environmentally beneficial crypto mining. Bitcoin worth $12 million stolen in pNetwork hack. The DeFi cross-chain protocol revealed it had been attacked, with 277 BTC stolen. On Binance Smart Chain, the cross-chain DeFi platform pNetwork was hacked for about $12.7 million in Bitcoin. According to the corporation, the exchange lost 277 pBTC. The company believes the hack took advantage of a vulnerability in its codebase. It stressed, though, that it was working to repair the damage. For the first few days, the bridges will operate with enhanced security measures, it stated. This means that transactions will take longer to execute in exchange for more security. Additionally, pNetwork offered to provide the hacker 11.5% of the stolen Bitcoin in exchange for returning the assets. In the direction of the Black Hat hacker. Although this is a long shot, we are offering a clean $1,500,000 reward for the return of funds, the plea stated. Unfortunately, discovering vulnerabilities is part of the game, but we all want the DeFi ecosystem to grow, and recovering funds is a step in that direction. pNetwork facilitates asset transfers to over 10 supported blockchains, including Bitcoin, Ethereum, Dogecoin, and many others. Following the appeal, the price of pNetwork's governance PNT token fell precipitously, falling over 17% in the last 24 hours. Not the first time a website has been hacked. However, this is not the first instance of a cross-chain platform being hacked. In July, decentralized exchange ThoughtChain suffered a $7.6 million loss, and just a few weeks later, it was hacked for an additional $8 million. The hacker later agreed to return the funds in exchange for a 10% bounty. This year, Binance Smart Chain has seen a slew of hacks, including those of Pancake Bunny, Cream Finance, Bogged Finance, Uranium Finance, Meerkat Finance, SafeMoon, Spartan Protocol, Burger Swap, Belt Finance, and pNetwork. One of the most recent was a record-breaking Poly network hack in early August, which resulted in the theft of more than $600 million. Fortunately, the hacker refunded the entire sum. Novak Skota, a crypto expert with the worldwide organization Crypto Broker, told CoinRivit that while hacks utilizing DeFi protocol weaknesses are not new, they are one of the system's primary diseases. The protocol's developers pay far too little attention to the overall system security, and the systems are becoming increasingly intricate every day, he stated. The hundreds of millions of dollars in prize money is far too alluring for so-called bug hunters. He also stated that he is pessimistic and sees no immediate solution to the problem other than the centralization of the entire blockchain upon which DeFi is constructed. For instance, we have the Tether blockchain, which is totally pegged to the US dollar, making it much easier to recover missing funds, he continued. As for the Binance chain, I don't see a quick fix unless it becomes centralized. Cryptocurrencies suffer another surprising crash, this time losing $250 billion in value. Cryptocurrencies have seen another devastating meltdown, wiping off an estimated $250 billion in value. Bitcoin sank 9%, Cardano and Ethereum both lost around 10%, as all major cryptocurrencies fell into the red. Analysts are investigating the matter and believe two major variables are at work. Global. Block's Jonas Luethi believes the developing problem of Evergrande is a significant factor in what has occurred in the crypto markets. Evergrande is China's second-largest real estate developer, and it recently informed banks that it will be unable to fulfill obligations this month. Over $300 billion in liabilities have been disclosed, and the company's stock has plunged to its lowest level in 11 years. Analysts think the corporation is on the verge of its own Lehman moment, referring to the collapse of the U.S. investment bank at the start of the global financial crisis in 2007. The controversy has already had a far-reaching effect on global markets, with the Dow Jones plunging 600 points as a result of the uncertainty. According to David Bonson, wealth advisor of the Bonson Group, there is little information regarding the impact of Evergrande's troubles on the global economy, and that uncertainty is enough to terrify markets. This market has had essentially no downside volatility for an extended period of time, and a correction was long overdue. Additionally, Bloomberg reports that Binance, the world's largest cryptocurrency exchange, is currently under investigation. U.S. regulators are investigating the corporation on suspicion of insider trading and market manipulation. While news of another crypto fall will be devastating for many worldwide who have money invested in the virtual currency, it is being greeted with optimism in at least one location. El Salvador became the first country to recognize Bitcoin as legal tender, allowing people to use the cryptocurrency to pay for anything. As the price of Bitcoin continued to fall, the Central American countries took advantage of the opportunity to acquire more. "We just purchased the dip," Salvadoran President Nayib Bukele tweeted. 150 more coins. El Salvador currently has 700 coins in his possession. "They will never be able to defeat you if you purchase the dips." Advice from the president. These 150 coins are worth approximately $6.7 million, which is substantial. And their cumulative investment currently totals $30.5 million. Cryptocurrency prices collapse due to global market fears. The main cryptocurrencies have all declined in price in response to a sell-off in stocks and concerns about China's Evergrande. Leading cryptocurrencies have plunged by double digits in response to a dismal week for the S&P 500 and the financial problem afflicting China's property behemoth Evergrande. Bitcoin, cryptocurrency's main asset, has mostly avoided a loss over the last week, sliding barely 2.6% in the last 7 days. However, in the previous 24 hours, it has dropped 6.9% to $45,000. El Salvador's president, Nayib Bukele, has used the occasion to recommend buying the dip as Bitcoin's price continues to decline. Since September 7, 2021, when El Salvador recognized Bitcoin as legal tender, the biggest cryptocurrency's price has plummeted by around 14%. In the recent week, as well as in the last 24 hours, other cryptocurrencies have seen even more drastic price drops. Solana is one such cryptocurrency, having lost 19.6% in the last week and 13.5% in the last 24 hours. Solana's rough week is mostly the result of a 17-hour downtime, which creator Anatoly Yakovenko blamed on bots flooding the network. Ethereum has also declined significantly, by around 8.3% over the last week and more than 9% in the last 24 hours. It's not immediately clear why Ethereum's value has fallen in recent days, given that it recently crossed the $3,600 barrier and Vitalik Buterin was named to Time's list of the 100 most influential people. However, Avalanche, considered one of Ethereum's major competitors, has been making waves, reaching an all-time high of $65 and soaring 400% since August's start. Cardano and Dogecoin are two other struggling cryptocurrencies that have lost 18% and 12.8%, respectively, in the last week. At least for the time being, cryptocurrency troubles do not exist in a vacuum. Additionally, stocks have declined amid a turbulent era for the global economy. An examination of the world's markets. Last Friday, the S&P 500 fell over 1%, with less than 75% of listed equities ending above their 200-day moving averages. That brought the fourth longest positive streak since at least 1928 to an end, according to Yahoo Finance. Additionally, a recent survey from the University of Michigan indicated that consumer mood is deteriorating, a trend that could have an effect on the cryptocurrency market. Fears over China's Evergrande, a property giant engaged in a debt problem that threatens to impair China's growth ambitions, appear to have fueled the worldwide market drop as well. Evergrande's financial troubles can be traced back to new rules governing the amounts owed by real estate developers last year. These rules permitted Evergrande to give premium discounts on properties, but the property tycoon is now drowning in interest payments on outstanding loans. If Evergrande collapses, the economic ramifications for China will be enormous. According to the BBC, Matty B. Kink of the Economist Intelligence Unit stated that the financial impact will be far-reaching. According to reports, Evergrande owes money to around 171 domestic banks and 121 other financial institutions, she continued. According to a Citibank report, cryptocurrency is reshaping the whole payment ecosystem. Citibank, the consumer branch of the banking behemoth Citigroup, has released a paper offering guidance to businesses considering cryptocurrency adoption. According to a new analysis by Global Citibank, cryptocurrency is altering the whole payment infrastructure. It continued by stating that digital assets have evolved from an internet novelty to a $2 trillion economy. What can organizations do to promote cryptocurrency adoption? The paper provides a roadmap for businesses considering cryptocurrency payments or simply investing in such assets as a store of value, identifying 3 critical factors to consider. The accounting department should be equipped with the necessary tools to deal with cryptocurrencies. Determining which cryptocurrencies will be accepted as payment. And whether or not the organization's balance sheet will include cryptocurrency. Cryptocurrencies have grown from an obscure internet curiosity to a market capitalization of over $2 trillion. Whether or not Bitcoin undermines the established payment system, it has generated new ideas in payment infrastructure, processing, and accounting, in addition to its growing popularity as a store of value, Citi writes in its study. The consequences of crypto adoption. Citi also accepts cryptocurrency payments in two ways. One is via the agent model, which entails contracting with a third party to gather and store their digital assets. The alternative is to use the direct model, which requires businesses to store and control their private keys using their own wallets. Nonetheless, one of the most significant difficulties confronting institutions is managing price volatility. When an organization accepts cryptocurrency, it is likely that it will wish to peg the price to its functional currency. As a result, cryptocurrency prices flex rather than fiat currency prices. While this enables the firm to control price risk, the true risk is borne by the crypto remitter, who is often a client or customer of the organization. This is the most recent report from Citibank analysts. In March, the division released a 100-page paper titled Bitcoin, at the Tipping Point, in which the team stated that Bitcoin might become the currency of choice for international trade as the crypto sector attracted significant interest from financial institutions. Citigroup, Citibank's parent firm, is likewise awaiting regulatory license to trade cryptocurrency futures. According to Crypto Potato, an unidentified source disclosed that the international conglomerate is awaiting regulatory approval to trade Bitcoin futures on the Chicago Mercantile Exchange, CME. No, Elon Musk is not offering you cryptocurrency. This is a fraud. Keep an eye out for emails soliciting membership in the Elon Musk Club. Over the last several weeks, a number of scam email campaigns have arisen online, promoting the next Elon Musk-themed cryptocurrency giveaway. According to Bleeping Computer, this new Bitcoin giveaway scam is dubbed the Elon Musk Mutual Aid Fund or Elon Musk Club. While these types of scams are obvious to the professional eye, many users continue to fall for them due to the appeal of free Bitcoin. While the majority of cryptocurrency scams target potential victims via social media, fraudsters have resorted to email spam to spread the word about this latest Elon Musk-themed giveaway hoax. The phishing emails sent to potential victims are low effort, with vague subject lines and phrases, but they do include an HTML attachment that states "Get free Bitcoin" or Elon Musk Club. The HTML attachment contains a single line of code that uses JavaScript to redirect a user's browser to a website posing as a Elon Musk mutual help fund and promising to send 0.001, about $43, to 0.055, approximately $2,395, Bitcoin to all participants. Elon Musk's Club. When a person visits the Elon Musk Mutual Aid Fund website and hits the Accept an Invitation button, they are transported to another page named Bitcoin Donate. Users are prompted to enter a Bitcoin address, their name, and an optional image on this site in order to obtain free cryptocurrency. After clicking the Accept Donation button, visitors are routed to a series of pages posing as other users donating 0.001 Bitcoin to their accounts. Once a user's account reaches 0.055 Bitcoin, they are directed to a final page informing them that they must donate 0.001 Bitcoin to another user in order to withdraw their whole sum. However, instead of releasing a user's funds, the scammers pocket the 0.001 Bitcoin. According to Bleeping Computer, 2 Bitcoin addresses associated with these frauds have earned a total of $2,661, but similar scams are likely to exploit other addresses. When it comes to emails concerning Bitcoin that arrive in your inbox, it's always prudent to remember the proverb: if something appears too good to be true, It probably is. Along with defrauding you of your hard-earned money, these scams can be used to conduct identity theft, particularly if you supply personal information such as your name, email address, or photo to those perpetrating them. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.